Welcome back to Smart Stocks Sam, the channel where we do the homework so your portfolio doesn't have to guess. Give me your attention for just 1 minute and answer me this. What if I told you there were 4 stocks that not only survived recent market sell-off, rather they went vertical while everything else was in decline? What if the calls we made few days ago hit with surgical level precision? And what if the biggest move in this entire bull run hasn't even happened yet? We are right now sitting inside one of the most concentrated, most institutionally validated momentum windows I have ever seen in neo-cloud sector. Today on Smart Stocks Sam, we are breaking down the neo-cloud bull run in full, revised price targets, technical structure, options flow, and the earnings catalyst that could reprice this entire space within 48 hours. The 4 names driving this run are Nebius Group, ticker NBIS, IREN Limited, ticker IREN, Applied Digital, ticker APLD, and CoreWeave, ticker CRWV. If you have been following this channel, this moment is exactly what we prepared you for. If you are new here, buckle up, because the forecast is coming true in real time, and you are watching it happen live. Let me set the stage, because the context here is everything. On May 4th, 2026, the Dow Jones Industrial Average dropped over 550 points. Massive oil shocks in the Strait of Hormuz rattled global markets and sent institutional fear meters through the roof. When the big indices move like that, the standard playbook says everything else bleeds alongside them. Macro fear spreads like a contagion, and money rushes for the exits. But here is what made May 4th historic for those of us watching the neo-cloud sector. These 4 stocks didn't just hold. They completely decoupled from the carnage and ripped higher in the face of one of the worst single-day macro environments of the year. Not because of luck, not because of retail hype, because they were trading on company-level catalysts that had nothing to do with oil prices or fear indexes. Capital recognized that physical AI infrastructure had become the new safe haven, and it rotated in hard and fast. Now here is where Smart Stocks Sam earns its reputation. Let's go back to the thesis from late April, because the accuracy of what we projected versus what actually happened is remarkable. For Applied Digital, we identified a critical put support level at $32.50. The stock bottomed intraday at $32.01 before reversing sharply and closing at $35.63, called it to within 50 cents. For Nebius Group, we set a no-miss entry of $118.57. But it didn't just touch that level. It blew straight through the $168.71 resistance zone and closed at $176.42. For IREN, we had a conditional trigger built around Bitcoin holding a floor of $75,500. Bitcoin surged past $80,000, and like clockwork, IREN printed a $51.29 intraday high exactly on our technical map. And CoreWeave, it broke our $112 immediate resistance level and closed at $125.43, right on target. Every single floor held. Every single breakout level was triggered. This is what happens when you build a thesis on the right fundamentals and let the data lead the way. But technicals only tell you when to buy. The why comes from understanding what these 4 companies are actually doing, and more importantly, how they fit together. What I call the neo-cloud matrix is the framework for understanding why these stocks don't just move together, they amplify each other. Nebius Group is the software and platform layer. Their focus is what they call the token factory, managed inference at scale, the layer that actually delivers AI output to enterprise and consumer interfaces. IREN is the energy layer. Their entire value proposition is about securing and deploying massive amounts of power in locations where AI data centers can actually run. Applied Digital is the infrastructure layer, the hyperscaler landlord, owning and operating the physical facilities that house the compute. CoreWeave is the GPU-native compute network tying the whole chain together. And here is what makes this picture even more compelling. Look at who is sitting on the institutional side of these positions. Zürcher Kantonalbank, Vanguard, ARK Investment, Jane Street. We are not talking about Reddit threads and retail FOMO. We are talking about the most sophisticated allocators on the planet making calculated, large-scale bets on this exact sector. Let's go deeper on Nebius, because this is the most aggressive mover in the group right now, and the story behind it is extraordinary. The headline catalyst is their $643 million acquisition of Eigen AI. On the surface, that looks like a headline number, but dig into what they actually bought, and it becomes something far more significant. Eigen AI brings elite Massachusetts Institute of Technology talent in-house and anchors a new research and development hub in the San Francisco Bay Area. This is a deliberate, long-game move to build proprietary AI capability at the infrastructure level. But the real validator here, the gold standard, is their NVIDIA Exemplar Cloud status for the next-generation GB300 chip architecture. That designation is not handed out casually. It tells you that Nebius has passed NVIDIA's own performance standards for hyperscale AI workloads, placing them in an elite tier that very few competitors can access. Now add to that the institutional signal. Zürcher Kantonalbank increased their stake in Nebius by 34,371%. That is not a rounding error. That is conviction. Analysts at D.A. Davidson are already pricing in a $200 target. The RSI is running hot at 73.93, and yes, technically that signals overbought conditions. But when institutional accumulation is happening at this level, overbought can stay overbought for a very long time. While Nebius is solving the software layer, IREN is solving the single biggest physical constraint in AI right now: power. On May 1st, IREN successfully energized the 1.4 gigawatt Sweetwater 1 site in Texas. To give that number some real-world context, that is enough electrical capacity to power a mid-sized American city, and Sweetwater 1 is just phase 1. The full campus plan calls for 2 gigawatts of total capacity, but raw capacity means nothing without a customer to monetize it, and IREN has already solved that problem. They have a multi-year GPU compute deal with Microsoft estimated to generate $1,940 million in annualized revenue. Their edge ranking sits at 98.55, and institutional ownership has crossed above 41%, meaning the market is no longer pricing IREN as a speculative Bitcoin miner. It is being repriced as a high-margin AI utility. Bernstein has put a $100 price target on this name, and with the stock currently holding its 200-day moving average at $42.32, the risk-to-reward setup here is one of the most asymmetric in the entire sector. Applied Digital is the hyperscaler landlord, and the financing they just secured tells you everything about how big money sees this business. They closed a $300 million senior secured bridge facility led by Goldman Sachs. Goldman doesn't lend $300 million without exhaustive due diligence on collateral and counterparty quality. And the collateral here is extraordinary: a $7.5 billion 15-year lease agreement with an investment-grade hyperscaler. Applied Digital also owns the world's only 100-megawatt direct-to-chip liquid-cooled data center, an operational moat that allows compute densities air-cooled facilities simply cannot match, which is precisely what next-generation GPU clusters require. The analyst consensus target sits around $53, but the high target in this name reaches $103.95. Meanwhile, Vanguard recently increased their stake by 36.4%. When Vanguard moves like that, the institutional floor has been set. And then there is CoreWeave, the GPU native giant. And the single number you need to burn into your memory is $66.8 billion. That is CoreWeave's total revenue backlog in contracted, forward-looking revenue, and it is growing at 35 to 40% quarter over quarter, according to Citi analysts who just raised their price target to $155. They recently signed a deal with Meta that runs all the way to 2032, built specifically around the next-generation Blackwell Vera Rubin platform. Jane Street, one of the most quantitatively sophisticated trading firms in the world, came in with a $1 billion direct investment as part of a $6 billion compute deal. ARK Investment made an $18,200,000 purchase. With the stock breaking our $112 resistance on May 4th and closing at $125.43, the structure is clean and the trend is confirmed. Now let's look at the price action itself, because the momentum data from the last 48 hours is telling a very specific story. On May 4th, Nebius led the group with a 14.20% single-day gain. IREN followed with over 8%. Applied Digital posted a 6.20% move, and CoreWeave added 5.39%, all on a day when the broader market was collapsing. And here is the critical detail. Every single one of these stocks is showing pre-market continuation into May 5th. Nebius is up 0.93% before the open. The others are holding their gains. When institutional buyers finish a program, you typically see consolidation or a slight give back the next morning. What you are seeing instead is continuation, which tells us the big money is not done. The buying pressure remains active, and we have not seen the flush of demand yet. So, where do we go from here? For the week of May 5th through May 8th, here are the levels that matter. Nebius is targeting the $185 to $200 range, with a support floor at $153.62. IREN is looking for a run toward $54 or $61, provided it holds above its 50-day simple moving average at $47.03. Applied Digital has a clear gap fill target at $38.54 with an extended move toward $42. And CoreWeave is working through the psychological $130 resistance level with a target of $150. These levels are derived from moving average structure and 52-week high proximity. Not guesswork, but here is where it gets really interesting. And this is the part of the analysis that separates serious traders from casual watchers. In the options market, Applied Digital has a short interest ratio of 31.54% and an off-exchange short volume figure of 57.07%. Combine that with heavy call open interest sitting at the $38 strike, and you have the precise conditions for a gamma squeeze. If Applied Digital breaks above $38 and holds, the shorts will be forced to cover involuntarily, and those market makers hedging the call positions will have to buy shares simultaneously, creating a feedback loop that can send a stock vertical in a matter of hours. Meanwhile, IREN is experiencing what traders call option gravity. The overwhelming concentration of open interest at the $50 and $55 call strikes is creating a magnetic pull. As the stock price approaches those levels, market makers are mechanically forced to purchase shares to delta hedge, which accelerates the move toward the very strikes that are pulling it higher. It is a self-reinforcing dynamic, and it is already in motion. For Nebius and CoreWeave, the implied volatility picture is equally intense. CoreWeave is pricing in an expected earnings move of plus or minus $14.06. Traders are heavily anchored at the $130 strike, anticipating a double-digit percentage swing in either direction. And Nebius has implied volatility running at 122.62%, one of the hottest readings in the entire market. Open interest at the $180 and $190 call strikes has surged dramatically. The options market is not hoping for a rally to $200 in Nebius. It is actively and aggressively pricing one in. All of this pressure, the institutional accumulation, the options positioning, the technical momentum, the gap fills in progress, is converging on one specific moment. Mark your calendars. May 7th at 4 o'clock in the afternoon Eastern Time. Both IREN and CoreWeave are reporting earnings after the market close. This is the catalyst event that has the potential to reprice the entire neo-cloud sector in a single session. If these companies demonstrate that their massive contracted backlogs are converting into real, recognized revenue, we will likely see a total valuation reset, not just for IREN and CoreWeave, but for Applied Digital and Nebius by extension, because they are all nodes in the same interlocking value chain. That value chain works like this. At the base layer, you have the physical constraints of the AI economy, energy and facilities provided by IREN and Applied Digital. Without reliable power and world-class facility infrastructure, AI compute has no home. In the middle layer, CoreWeave converts that raw power and physical space into GPU compute accessible through a $66.8 billion backlog. At the top layer, Nebius wraps that compute in managed inference, delivering actual AI output to enterprises and consumers every day. Every layer supports the one above it. When one wins, the entire chain benefits. This is why these four names are moving together, and this is why the May 7th earnings catalyst matters for all of them simultaneously. Here is Smart Stock Sam's final read on this. The macro environment is simply not the governing force for these stocks right now. Company-specific AI catalysts are creating isolated alpha in a sector that institutions are actively re-rating. We have moved past theoretical projections. We are watching unprecedented backlogs convert into locked, contracted, multi-year revenue at Applied Digital, at CoreWeave, at IREN. The options market is not being subtle about where it expects prices to go. The institutional ownership prints are not being subtle about who is accumulating, and the earnings clock is ticking. Before we wrap up, an important reminder. Everything discussed on Smart Stock Sam is for educational and informational purposes only. Nothing in this video constitutes personalized financial advice, investment recommendations, or a solicitation to buy or sell any security. All investing involves risk, including the possible loss of principal. Past performance, including any forecasts or thesis calls discussed today, does not guarantee future results. Always conduct your own due diligence and consult a qualified financial professional before making any investment decisions. Options trading carries additional and significant risk and is not appropriate for all investors. Now, the neo-cloud era is not approaching. It is already here, it is already generating revenue, and the institutions have already taken their seats at the table. The only question left is where you are sitting when the May 7th earnings bell rings. I want to hear from you in the comments right now. Do you think this bull run has legs, or these equities are overextended and due for correction? Drop your answer below, because this community's collective insight is genuinely one of the best parts of building Smart Stock Sam together. If this analysis gave you something actionable, something you could not have built alone, hit that like button. It takes 1 second, and it helps this channel reach more serious investors who are looking for exactly this kind of work. If you are not subscribed yet, now is the time. Hit subscribe and ring the notification bell so you do not miss our post-earnings breakdown, which will be live immediately after the May 7th close. And if you want to go the extra mile in supporting what we build here, YouTube's Super Thanks feature is right below this video. Every contribution directly funds more research, more data access, and more of the deep dive content you just watched. Stay disciplined, protect those support levels, and I will see you in the next update.